Concentrix just dropped its Q1 2026 earnings, and buried inside this call are 10 signals that tell you exactly where this company is heading. Whether you're an investor, a client, or just tracking the AI services space, you want to stick around because number 1 on our list is something most people completely missed. Coming in at number 10, Concentrix is laser-focused on reducing financial risk. The company set a clear target to bring its net leverage ratio below 2.6 times adjusted EBITDA by the end of fiscal 2026, using free cash flow generation and asset sale proceeds to get there. That's a disciplined balance sheet story worth watching. At number 9, despite a seasonally negative first quarter for cash flow, something management flagged as a normal annual pattern, Concentrix held its full-year adjusted free cash flow guidance firmly at $630 to $650 million. The Q1 shortfall was entirely timing-related, with receivables collected in the first week of March. Number 8 is about smart debt management. In February, the company issued $600 million in new 3-year senior notes at 6.5% to retire higher-rate notes originally due in August 2026. That proactive move takes a near-term maturity off the table and gives management more breathing room. At number 7, Concentrix announced cost restructuring actions in the first half of 2026 expected to generate approximately $40 million in annualized savings, net of growth investments. Those savings are specifically earmarked to fuel sequential margin expansion in the second half of the year. Number 6 highlights where the revenue strength actually lives. Banking and financial services surged 13% year-over-year in constant currency, while retail, travel, and e-commerce grew 6%. Both verticals are seeing broad-based wins, and importantly, clients in those sectors are now buying technology solutions they never outsourced before. Number 5 is the margin recovery roadmap. First-half margins are intentionally compressed as transformational deals ramp up and offshore capacity fills. But management outlined a clear step-up pattern, stable to slightly expanding in Q2, a bigger lift in Q3, and a further jump in Q4, targeting a full-year non-GAAP operating margin of around 12.5%. At number 4, Q1 revenue came in at approximately $2.5 billion, right in line with guidance, representing 1.9% constant currency growth and over 5% on a reported basis. In a cautious macro environment with ongoing geopolitical uncertainty, executing on guidance is itself a win. Number 3 is a big one for the AI monetization story. Concentrix exited Q4 2025 with $60 million in AI annual recurring revenue and is targeting $100 million or more by the end of this fiscal year, and management said they're actually tracking slightly ahead of that plan after Q1 results. Coming in at number 2, Concentrix closed nearly 60 enterprise 9-suite deals in a single quarter, including its 2 largest 9-hero contracts ever, both with Fortune 50 companies. Those clients will use Concentrix's proprietary AI to modernize customer interactions, and the deals open the door to selling additional solutions into those accounts over time. And the number 1 takeaway from this earnings call: AI-related technology wins grew more than 61% year-over-year, and the signed annual contract value for AI and solutions more than doubled quarter-over-quarter. This isn't a company dabbling in AI. The go-to-market has fundamentally shifted, client acceptance is accelerating, and Concentrix is positioning itself as a full-stack AI solutions provider, not just a contact center operator. That transformation, if it reaches scale as management expects, is what could drive margins back to historical highs and beyond. Drop your thoughts on Concentrix in the comments below, and don't forget to subscribe for more earnings analysis from Earnings Central.